All right, my friends, I think we're pretty close to a bottoming out of the market. I think we probably got another 10% down to go. Now, do not sell to avoid a 10%. I mean, you can do whatever you want, but look, I don't know any better than you do, but I'm going to share with you why I think this is the case. And don't sit there and say, oh, if Josh says I'm going to avoid the next 10% down, and I'm going to jump back in once it's down 10%. Don't do that because I could absolutely be wrong. S&P is at 19% down for the year, or down off its top. Not quite bear market. We briefly reached bear market at one point. I'm not sure if we did today or not, but we briefly reached bear market. We just haven't closed at bear market. We're still not there yet. NASDAQ's down, what, 32% or something like that as of close of business today. So at the end of the day, it's kind of like we're sitting there thinking we're NASDAQ's getting crushed. S&P's down 19%. Large cap growth stocks are getting crushed. Not quite sure. Value stocks, 15% or something like that. Bonds are getting crushed. The bond, I mean, I imagine bonds got crushed today too as well with the inflation numbers that came out. I think we're nearing the bottom though, and I'll tell you why. And I would expect another 10% decline. I mean, the S&P would be down 29%, which is pretty significant. You don't get that kind of decline that much, but I would expect that. I'm prepared for it. Could be worse. Could be a whole lot worse. I don't know. You don't know. But here's why. All right, so I'm reading my man Brian Wesbury over at First Trust Advisors. And his tone in his blog today was very illuminating because Brian is normally a very optimistic guy. So now, Brian Wesbury was saying the market is fairly valued now. And instead of being pretty optimistic on expectations for the rest of the year, they seem pretty neutral, And if you just kind of read between the lines, you know, when he says fairly valued, well, he was also saying that there could be more pain to come. And I think he actually said almost something identical to that. There could be more pain to come, which is very weird because I've been following Brian a long time. And he's been optimistic, like you wouldn't believe, for through Trump, through Obama, through Biden. This is the first time I've heard them read into this that the downside is persistent and possibly, or possible, I should say. Normally, it's been, you know, we expect more growth. We expect the S&P 500 at 4,800, at 5,200. Now the S&P 500 at 3,900. The fact that it's down to 3,900, the fact that Brian said, I hate dead animals. I hate that. It just drives me crazy. Why? I tell you, man, I saw a dead turtle today, a dead snake. Oh, it just pains me. From dust to dust, ashes to ashes, I get it, but still, man, that guy he's just living his life and boom, freaking car. I mean, look, cycle life, I get it. Still, the cycle life certainly wasn't including cars running over innocent animals. Yeah, I mean, what are you gonna do about it? You can't. It is what it is. But anyway, so listen to reading Brian Wesbury, like, whoa, he sounded cautious. And if I may remind you, my friends, back in March of 2020, I said capitulation is here. I'm not sure, I won't be able to link to the video, but look it up. Just type in the word capitulation. I'm not sure if that's going to show anything. And I was right. Because when everyone's getting nervous and everyone's calling for more blood in the streets, that typically means that the blood in the streets has already happened. And now it's going to time to level off, maybe go down a little bit more, which is why I expect a 10% more decline. And then you start to get back to moving the ball forward. And I was right, because I've been doing this for a long time. But when guys like Brian Wesbury started getting nervous, and the reason these guys are getting nervous It's pretty simple. It's because they expect the Fed they thought the Fed was the cause of inflation, and they expect the Fed to be able to nip in the bud. And if the Fed didn't cause it, the Fed can't nip in the bud. And I think that reality is starting to settle in a little bit here in basic economist vernacular. They're starting to say more and more, inflation isn't just a monetary problem. It's just not. In fact, if anything, inflation, as I've said for a while now, the monetary side of it isn't the cause of this. It's the energy side. Just reading today that a bunch of renewable energy companies are abandoning their battery production facilities. Again, this whole thing with green energy sounds good on paper, kind of like dark matter, sounds good on paper. In reality, it's all freaking fantasy, man. So we're down 19%. I could easily see the S&P 500 going down another 10, which would put us down 29%, which is pretty significant. We had 37% in 2008. 1972, 73, and 74. S&P 500 was down about 42% between those 2 years. Pretty significant. Obviously, 1930. 31 is down significant. I think in 1930 it was down 44%. And I can't really think of any other time it was down that much. I'm trying to, in terms of being around 30%. I mean, that's a pretty significant decline. It just doesn't happen that much. But I expect it to happen. And I expect that what's going to happen is the Fed's going to raise the next meeting, I don't know when the next meeting is, they're going to raise 75 basis points because they're going to throw the kitchen sink at it. And all that's going to do is hurt the bottom line for companies. It's not going to do anything for inflation because, again, they didn't cause the inflation. But it's going to hurt the bottom line, and the bottom line will hurt stocks go down some more. And then what will happen is you'll see a pain point where there is true capitulation. And that's when it'll be where we not just get a dead cat bounce, but we'll come back up and start rock and rolling. I don't know if we're going to start rock and rolling in terms of massive growth out of 2009. I don't know. But it'd probably be like a 2003 and 4. I think 2003 is pretty good, but 2004 and 5. 2004, 5, and 6, and 7, they weren't great. That's for sure. I think we're probably looking more like that. 5%, 12% on a good year, 5%. 6%, something like that, which is of course what my projections are for going forward. But 5.5 to 6%, 6.5 on stocks, 2.5 on bonds. Combination 60-40, you're looking at about 4.5 to 5% rate of return. Look at that gorgeous thing. How can you not love nature, man? You see that guy? I'm not sure what that is, but it's a big old bird, swan. Nature's the best thing since sliced bread. Primordial soup. Yeah. Primordial soup. We all evolved from a common ancestor. Yeah. Fanciful. Anyway, so be prepared for another 10% down. But I think after that, we'll probably be okay. And we'll see how it shakes out. Hope you got some cash on the side, though, because I think the next 6 months are going to be rocky. If you think the Republican Party is going to save you, I got another thing coming, man. Give me a break. Politics can't save you. Politics put you here, but they can't save you. All politics can do is get out of your way. You got to save yourself, man. And the way to do that, of course, is to get out of debt, have some cash on the side, try to reduce your cost of living, and just get on your knees and pray. Pray for salvation. God's got it. Sorry, we'll see you.